So mortgage rates, they're historically low, and they have been for the last couple of years during this COVID pandemic. Now, as far as predictions for 2022, we can expect that interest rates are going to rise. And the reason why is because the market's stabilizing. The COVID pandemic is starting to dwindle down quite a bit, and things are starting to go back to normal. The Fed doesn't see the need essentially to keep the interest rates as low as they are, and so we'll start to tick them up. Now, I don't see a significant rise in interest rates. So, for example, we're not going to see 3% go to 5%. We'll probably look at high threes, maybe even to low fours, as far as interest rates are concerned. And this is all going to be dependent, again, on the market itself. We're going to be looking at things like how we got this new even Omicron variant, how that's going to impact things, different things with Russian complications, or just more actions with the Biden administration, how we work along with the world economy. All these things are going to factor in whether or not interest rates are going to rise, or at least how much are they going to rise. Even with the talks of inflation and getting that under control are going to impact that. But even with all these factors into play, most everyone is in agreement that interest rates are going to rise regardless. It just depends how much. Not a matter of if, it's just a matter of how much at that point.
And there, you have to add some additional discussion to that. Really, it's their record low rate still. I mean, last year we saw some rates in the 2% range, right?
100%.
Yeah, which was really low, probably the lowest that we've seen in a number of years. So even at 3% or below 4%, they're still very low, and in some cases will be an opportunity, especially for a lot of the millennials who are now buying homes in 2022 and beyond. So
yeah, and to add more on to that, let's for example, for those that are just buying a home now, you have millennials, for example, you've been seeing nothing but 3%, maybe 4% your entire life, or at least since you've been shopping for a property. But there was a time before you purchased a home that interest rates were closer to 9%, and you paid for that. And you took it with a smile on your face, which is why homeownership wasn't available for every person a couple decades ago. I'd say about 3 decades ago. And some people would even argue a little after that. And so keeping things in perspective, rates are still historically low. And so it's still a phenomenal time to buy, even if you see it trending upwards. Your parents probably paid 9% before they refinanced when rates were lower.
My broker talks about when he started in the business having double-digit interest rates, which is crazy to think.
To think, because you're paying as much as you would for a car with terrible credit. And so you got to keep that in perspective. So even if we see rates trend upwards, it's still very low compared to what they used to be and what they could be. We could very well see that in the next couple decades, where they are up at 15% again, depending on your profile. The market's just booming that hard. If while we're in low interest rates, 3%, is it higher than 2%? Sure, but it's definitely lower than 15%.
Yeah. So from a home buyer standpoint, can you speak to what drives your ability to get the lowest and the best interest rates? What kind of things are you guys looking for?
Well, the biggest thing is timing. You gotta pay attention to what's going on in the economy at the moment, especially how bond markets are reacting to what's going on in the stock market as well. So, for example, if rates have trended up in the last week, if you try to lock in there, it's going to be higher than what someone did the week prior, or the next week could be lower again. So we got to keep an eye out on that. Other factors, the most important one is your credit. Credit being your credit history being, how well do you pay things back that you borrow? To explain it simply, the higher the credit score, the less risk that you are, and the more program advantages that you have available to you. And in that case, you can look at more of a conventional loan versus an FHA loan. Both have great interest rates right now, but for a conventional, you tend to have a bit more wiggle room, especially when it comes to your mortgage insurance. Those are the two biggest factors. The last one I would say, as far as your interest rate is concerned, is how much money you put down. The lower amount that you put down, will affect how much interest you're going to be paying on that, because it's going to be based on your level of risk, especially for a conventional loan. So, for example, you will pay a higher interest rate on a 3% down than you would put down 5%, and it's significantly different because it's the level of risk. And so, if you put down, let's say, 15 to 20, you will definitely get a lower interest rate as well. So, your skin in the game also plays a factor in the interest rate that you have available to you.
Okay, that's very helpful. And what's a good credit score to get the best rate, or to get assuming that you have resources, 10 to 15% to put down, what's considered a good credit score to get the best rate?
If you want the best of the best, you're probably looking between 740 to 760.
Okay.
760 being the highest, where anything after 760, you already have the best. No one really, it's kind of capped off at that point. There's some people that have 800 credit scores, but 760 is typically the top. Anything over 700 is considered great, but the 740 is where you get the best premium pricing that is significantly better than everybody else. Okay. As far as for anything for conventional loan, anything over 680, I'd recommend for conventional versus an FHA loan, because you can typically save more money on the mortgage insurance. And then anything under 680, in this market, I would recommend an FHA loan. And the rates are pretty comparable right now, but under that 680, you get more bang for your buck on an FHA loan, even though the mortgage insurance is on there for the life of the loan. And the idea is that even though that's the case, refinancing is available, which we'll talk about more. But essentially, the idea is you get your score up to over 700 and refinance to a conventional loan and lower the MI, or take that off completely.
Okay. Please reach out directly to Roosevelt. His information is here on the screen. Again, our consultations are no charge. We're just here to help to build legacies of wealth in our communities. So Roosevelt Tillman from Ruoff Mortgage, I thank you. And then I included my card there. So there is my phone number. Again, Tanya Powell May with the Legacy Homes GR team at Keller Williams North. And we thank you for taking the time to watch our video and to spend some time with us today.
Thank you again, Tanya, for having me on. Thank you, Legacy Homes team. And again, if you guys have questions about mortgage and real estate, reach out to either of us. We'd be happy to help. Thank you again for taking the time to watch.